Okay, hello everybody, and welcome back to another video from the Investor Diary. I don't know what is happening now. This is the third time that I try to publish, and the publishing. I finished the whole video and I press publish, and it is not publishing. I don't know why. So what I'm going to do is that I'm going to do this last time. If it went through, that's fine. But I changed the currency that I am recording on. I used to have it here, maybe because there is a replay, there is something wrong. I don't know. So what I will do is I will do it here on a place where there is no replay. Maybe that is the issue, but I'm not really sure. Anyway, so today we are going to talk about and now, before I go into that, so if this did not go through, I will download the video and upload it to my YouTube. Okay, so today we are going to talk about trading, the trading philosophy. So excuse me because I have been saying the same thing for three times, and some other three, four takes which I had to cut because I was babbling. So yeah, it's tough. So let's see how things will go. In this video, we are going to talk about trading philosophy. And trading philosophy is something that one, in my point of view, one reaches after um, a, a considerable amount of experience in trading to be able to come up with a kind of mature philosophy. Any philosophy that would come out, of course, it will be evolving over time, even from whether I was experienced or not experienced. Anyone developing a philosophy in life or in business or in anything, it will evolve over time, of course. But to start the process of creating a philosophy in a certain aspect. In my point of view, I think it needs a considerable amount of experience, especially the experience in things that are not working. So when things are not working, our mind start looking for answers, and when our mind start looking for answers, this is the time when philosophies would come out. And this is what has been happening with me for the last many years. Well, but I'm not going to go that far away back. Uh, but what for the past few weeks, trying different schools and different ways and different things to be able to decipher the market and understand how to design a solid marketing plan that would marketing the trading plan that would be consistently profitable. I realized that there are things much deeper than strategy that I need to look at and study further. So I started from the very simple. I started from um, l- let's fix this first. I use FXCM. I don't know, but not most of the videos that I see, people are using Owanda, but I use FXCM. I'm not sure, to tell you the truth, which one is better, but I really don't know which one is better. So I went through questions that are a little bit advanced. They are bordering between plan and philosophy, so they are not really deep philosophical. They are bordering on the trading plan, but they are not a plan by themselves, so I will explain. But before that, what I did was a little bit aesthetic regarding the canvas here. You can see that I've changed. It's not. This is not white. The canvas is not white because the white was very bright for me, and I found someone who's using yellow, a relaxing yellow actually. But I had trouble copying that color. I couldn't find it, so I went and found this color, and it's not in the main palette. I had to go here, do a few trials, and this is the number F5 F1 EA if anyone is interested. So, and the black color makes makes the prices and the indicators on the chart really bright. So, and the black does not work outdoor, and I do some work outdoor. So this is the first thing, and I also changed I got a monitor which is big enough. Not I used to do things on my laptop only, but I got a monitor. So I worked on my work environment. This is one. Two, something caught my attention. Someone was talking about cause and effect in trading. And this is, in my point of view, a very important aspect. Cause and effect. Like these indicators and even the averages, EMAs, EMAs, or AMAs, or SMAs, or whatever the letter before the MA, all the moving averages, all of those. I don't want to talk about lagging or not lagging indicators. This is not the language that I want to use, but I'm going to use the language of cause and effect. So, what does make this price, and this was a loss? Okay. What makes this price move in a certain direction? If I want to look at this and I say, for example, my previous plan was I will look at the stochastic, and if it is above the 80 or below the 32, for example, if it crossed, no, like this one, if it crossed above let me put it here, if it crossed above the 80, I would sell. If the D crossed the K, if the K crossed the D above the 80, I would sell. So I sold, and here, I sold here. Okay. So the first one got hit. It went up here. And I saw, and I thought, okay, the second one, maybe the second one would be better. Okay, so I went and traded the second one here. So I didn't go here, I went here. Okay, and still the same thing. So the stochastic is not saying that when the price gets here, or when the oscillator gets here, the price is not affected by the oscillator. The oscillator is affected by the price. The price is repackaged, and I love this terminology. I love this term because it really describes the situation. It repackages the price in a different report. This is a report of this. This is a price report using a certain formula, but it's repackaging what's happening here here. So this does not affect this. It is wrong to say when the oscillator goes here, the price will go down. No, the oscillator went up here and did this because the price did this. So the oscillator is the effect of the price. So my question is, what affects the price? And this is something that I want to look at by understanding the elements of market structure and SMC, not through market structure and SMC, but through their elements, through order blocks, order flows, and the trading range of the different time frames. Okay, not on a single time frame. So I want to understand the concept of cause and effect on a chart of a price. Now, the second point in the strategy, in the philosophy, is I want to understand the asset that I am trading. So I will not, as before, create a plan and then go tuck, 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 tuck on all 28 as I used to do. No, I want to, and this is something I got from my investment. In investment, I would follow the strategy, the philosophy to say, I do not trade something that I do not invest in something that I do not understand. Okay, even if it seems to be great and it is profiting, I will not invest in it if I don't understand the business, if I don't understand the works, how the industry works. The same thing I want to follow in trading. So now I am going with the Euro USD, and you can see it's a replay. I thought I stopped because I thought when I went here and saw this published, I thought there was something went wrong again. Okay, thankfully it didn't. So I want to understand Euro USD. Once I do that, and then if I have the time and time allows, I might move into a different asset. But for now, I'm going to concentrate on one asset, which is the Euro USD. I will go, I have already, I went to where, no, not this one. Okay, on this one. So, going back to the working environment, since now I am a subscriber in TradingView, so I'm using the features. Now I can use five instead of two indicators, and I can use the split screen. So, this is saving me time. Now that, when did I subscribe to TradingView? And why I used to, for a couple of years, I was using it for free. I was using it for free because I wasn't advanced enough to pay for those services. It's like our phones. We buy very expensive phones, but we only use what, 1% of their features? So this is the philosophy. I bought into TradingView because now I need those tools. I know what I'm doing, and I need those tools to help me to create a more efficient and effective environment. So I am working on my work environment. So going back to the philosophy of understanding one asset, um, I went to the monthly, where again I did the same mistake. Yeah. So I built this on the monthly. Now I understand. For example, this is this moved. I don't know why. So the high here is 14948, 19948. So the minor inducement here is not hit. And that means there is a possibility that the price wants to hit and get that liquidity to move down. This is a bearish structure on the monthly from the red high. This yellow is the weekly low. It's not the monthly low. So the monthly does not have a low yet until the inducement is hit, whether minor or major. But until now, it is minor. So will it go down, breaking the low of the weekly to create another pullback and another inducement? And this, in this case, it will be a major inducement, or will it actually go up, hit the inducement, get that liquidity, and then move down? And now, for that question, I'm giving you an example of the questions I'm going to ask. So here we have an element on the weekly. We have with the minor inducement of the monthly, we have an extreme order flow. The decisional overflow on the weekly was not respected. Okay, so again, this is the low of the weekly, and there is now two reasons why the price would go up here, and we'll see that now. And it is a bearish direction, it is a bearish structure. Let's go to the daily. The daily is on the blue one. the daily is as well a bearish structure, and the IDM is not hit yet. And this is where the decisional is, and this is where the monthly inducement and the weekly order flow, extreme order flow. So there is a possibility for this structure to be broken. Okay, but we don't know that yet. We have no indicators. Even the stochastic is saying there is still room for the price to go down. Okay, and on the RSI is not oversold yet on the daily, and it is below 50 and below its average. So we still have, but on the 4 hour we started to see some green candles, and its low was not hit, and this is interesting. So this low was not hit on 3 occasions. Okay, was not able to hit the low, so which is explained by this rejection. Okay, I think so. This is how I will be looking at the asset. I want to understand, then I will be moving to the 4 hour, which is here. I did that, and I thought that I draw the elements. Why didn't I draw the elements here? There is, I started drawing them. This is the 4 hour extreme order flow and extreme order block. I think we don't have a decisional. I think we don't have a decisional. It's the same as the, okay, because this is where this is where the break of structure, and we have nothing here. We have, those are the extreme order flow and order block are the ones that broke the structure. Okay, so we don't have anything here. Are smart money traps. So yeah. So those are the things I'll be working at. Understanding the cause and effect, and understanding the asset, one asset at a time. I want to understand the asset that I'm training and that I'm trading in the same way that I understand an asset that I am investing in. And once I do that, and before that, I will go through a self training starting from the January 25 and ending in December 25. And I want to see the results. Did I make an improvement? Did my understanding, based on the trading that I do, did I understand the concept right? I want to see if I got relaxed with the ins and outs of how the price moves. Okay. And that's it. This is what I want to do. And I will be training myself, and let's see how it goes. And also, let's see how it goes with this video. I hope it gets published. Okay, guys, I will not see you. Christmas is coming, and I'm going to see you next week. That is after Christmas. And therefore, Merry Christmas to everybody who's celebrating Christmas on the 25th, and everybody who's celebrating Christmas in general. And I'll see you next week, hopefully. Thank you very much, and see you. Bye bye.